Have you ever looked back on a decision you made when you were just 11 years old and realized it changed the course of your entire life? What if I told you that one of the richest men alive today, with over $100 billion in net worth, made his first big investment at that very age and got it wrong? But what he learned from that mistake, that's what made all the difference. In today's episode, we dive deep into the mind of Warren Buffett. This isn't just about how to invest your money, it's about how to invest your life. So stay with us through the end, because the last lesson might just change the way you think about wealth, happiness, and success. March 11, 1942, the world was at war. In Omaha, Nebraska, an 11-year-old boy used $114.75 of his hard-earned savings to buy 3 shares of City Service preferred stock. That boy? Warren Buffett. He was obsessed with stocks, not businesses, just stocks. He tracked price movements, charted patterns, and dove deep into books like Technical Analysis of Stock Trends by Edwards and Meiji, the holy grail of chart watchers. But he had it all wrong. He didn't understand what he was buying. He wasn't investing, he was speculating. And it took him 8 years to realize it. At age 19, Buffett discovered a book that would change everything, The Intelligent Investor by Benjamin Graham. This wasn't a book about quick profits. It was about buying parts of real businesses, not just tickers on a screen. It was about value. Buffett realized he had been playing the wrong game. From that day on, he stopped thinking like a stock picker and started thinking like a business owner. He bought companies, not just stocks. He stopped caring whether prices went up or down tomorrow. He cared whether the businesses he owned would thrive 10, 20, or 50 years into the future. Buffett's brilliance isn't about being the smartest in the room. He says himself, "You don't need a 170 IQ to do well in investing. A 120 IQ and emotional discipline will take you much farther." Most people, he says, treat the market like a casino. They hope stocks will go up next week. If they don't, they panic. Buffett? He hopes the price goes down so he can buy more. Just like a farmer is happy when land gets cheaper, so he can buy more land. Buffett sees stocks as farmland, real income-generating assets, not lottery tickets. Buffett has kept over 80% of his wealth in American businesses his whole life. Why? Because he believes in the long-term power of the U.S. economy, the growth of the middle class, the innovation of entrepreneurs, the freedom to build. He often reminds audiences, if you had invested in an S&P 500 index fund in 1942 and just left it alone, you'd be a millionaire many times over. He doesn't try to outsmart the market. He trusts that solid businesses, run well in a free market, will grow in value over time. Today, even amid inflation, tech disruption, or global uncertainty, Buffett's strategy hasn't changed. Bet on productivity, innovation, and human progress. Even with his immense wealth, Buffett lives in the same modest house he bought in 1958. He doesn't own multiple mansions. He doesn't drive Ferraris. "I just have more problems," he once joked. "One house is enough." Happiness for him isn't about more stuff. It's about doing what you love with people you trust. That's why he built his company, Berkshire Hathaway, with partners he admires. He surrounds himself with people who push him to be better. Buffett often says, "The best investment you can make is in yourself." Wealth isn't just money. It's freedom, it's knowledge, it's time, it's health, it's relationships. And the U.S.? Despite its flaws, Buffett believes it has created more opportunity than any nation in history. He says, "Even the bottom 2% in America today live better than Rockefeller did in the early 1900s. From modern healthcare to streaming football games in HD, we live better than kings once did." With advancements in AI, remote work, and digital access, Today's generation has tools Buffett never imagined, and yet his core lessons still apply: focus, patience, and long-term perspective. So what can we learn? Start early, but remember, it's never too late to begin. Buffett made his first mistake at 11, but his breakthrough came at 19. The point isn't perfect timing, it's staying in the game long enough to grow. Invest in what you understand. Whether it's a corner bakery or a tech startup, don't buy into hype. Know the fundamentals. Buffett never invested in crypto or meme stocks, not because they were bad, but because they were outside his circle of competence. Focus on businesses, not just price charts. A stock is more than a line on a screen. It's part ownership in someone's vision, sweat, and strategy. Keep it simple. Some of Buffett's biggest wins, like Coca-Cola, American Express, and Apple, weren't complex. They were businesses he understood deeply and believed in. Stay the course. Don't panic with every tweet or headline. Trust in long-term fundamentals, not short-term emotions. And most of all, do what you love. Buffett didn't chase money. He chased clarity. Passion gave him energy. Discipline gave him direction. Time gave him results. The real wealth? A life lived on your terms, with purpose, with joy, and with impact. If this story gave you something to think about, maybe a new way to look at investing, or even just life itself, go ahead and tap that like button. And if you want more stories like this, hit subscribe and turn on that bell so you never miss an episode. I'd love to hear your thoughts, so drop a comment below. What's the best lesson you've ever learned about money? Thanks for listening. Until next time, keep learning, keep growing, and keep walking your own road to greatness.